So, how are the Gulf economies holding up after almost 2 months of conflict? Surprisingly little is actually known about that, honestly. So, to fix that, I'm joined today by one of the leading experts on Gulf economies, Steffen Hertog, who is a professor in comparative politics in the Department of Government at the London School of Economics and Political Sciences, LSE. And when I looked at the numbers for some of these countries for one of my own videos, despite their different strategies, I was honestly just astonished by how much of Gulf country GDP and exports were just paralyzed essentially by the closure of the Strait of Hormuz. This is something that we rarely see. We're talking about like half the economy being paralyzed. Pretty unheard of, and yet we don't actually hear a lot of news about how these economies are holding up. So this is where Professor Hertog comes in. Welcome to the show. I'm really keen to know, how are the Gulf economies holding up?
Yeah, sure. So it differs both by country and it differs very much by sector. So perhaps I'll start with the sectoral perspective. If you look purely at the oil and gas hydrocarbon sector, then for the countries that are trapped behind the Strait of Hormuz, the situation is very, very dire because they can't get out their exports, and that dominates their overall trade profile, certainly their export profile. So if 80 or 90% of your exports are oil and gas and you're Kuwait or Iraq or Bahrain, then this has been essentially shut down. So that means a very, very drastic shrinkage of that part of the economy, and that segment accounts for something like 30 or 40% of the overall economy in most of those cases. So on paper, that's certainly very, very drastic, both in terms of that particular sector, but also total nominal GDP. So very few countries have gone through that kind of shrinkage in their overall GDP in such a short period. But that all being said, what people feel on the ground in those economies is not what's going on in the oil sector. It's what's going on in the non-oil sector, right? Most people work in the non-oil sector. They receive their salaries in the non-oil sector. They consume in the non-oil sector. And those have been affected, obviously, through various confidence mechanisms, through people, expatriates leaving the country in the countries that are more reliant on kind of expatriate resident demand. But the impact has been much, much more modest. So obviously, again, specific sectors of the non-oil economy, say tourism, very heavily hit, but other sectors that mostly rely on local demand from local households, regular retail, a lot of F&B outside of the Emirates, where the expats constitute such a very large part of the overall consumer base, public services, education, healthcare, transport, all those have been holding up quite well because at the end of the day, the demand basis is still there. Governments have continued to be able to spend. They have very large fiscal buffers, and a lot of non-oil economic activity is directly or indirectly reliant on state spending. So people on the ground, apart from sort of the psychological effects of obviously living in a war zone, haven't felt it that much economically.
So it sounds a little bit like COVID in the sense that it feels like they're in a little bit of a lockdown type of situation where, yes, everybody notices it, but because the government just keeps on spending, it's less noticeable than what the numbers might suggest.
Yeah, I think that's true, and it's especially true for nationals who tend to be more protected on the labor market, where during COVID, the government in many GCC cases then stepped in to part subsidize salaries or even paid governments to keep people on the payroll while they were staying home. And pretty much all of the governments among the Gulf oil monarchies, not necessarily Iraq, but the Gulf oil monarchies have that kind of fiscal ability. It's sort of in question in the case of Bahrain, which has a very high debt level, but it tends to get bailed out by its richer neighbors.
Do you think they will also get bailed out now, Bahrain?
I think Bahrain is too strategic not to get bailed out. I mean, the conditions of the bailout tend to get a little stricter every time. So every time Saudi Arabia and the UAE say that, well, you got to keep your house in order a little bit. You have to increase your VAT rate, for example, to create some non-oil revenue. We've done it ourselves. We can't bail. We can't, expect you not to do it. We can't justify that to our own people if we've imposed austerity on them. But because of the geostrategic context, because of the Shiite minority in Bahrain, because of the fear of Iranian influence, it's always going to be a very, very critical bit that is kind of not too large to fail, but kind of too politically important to let fail.
You also mentioned as one of the key sort of effects maybe going on outside the oil and gas sector, the expatriates, which dominate famously the UAE economy, but are also very important in Saudi, are also extremely important in Qatar, are also very important in Kuwait. Are many people already leaving, or are they sort of holding out?
Recent reporting was that I think more than 30,000 British expats have left the UAE. And that's, just of something like 200,000 or 300,000 Brits, and the overall number of expats is something like 8 million. So if you scale it up to the total population, it does start to become significant, but most of those are not leaving permanently at this point. So it's all still in a wait and see pattern. It affects consumer markets, obviously, but they want to see how the conflict pans out, what the eventual settlement is. So there is a scenario where pretty much almost everyone comes back and things go back to normal. But there are also scenarios where that doesn't happen.
Yeah, so it's almost like there's a big vacation or something going on.
Exactly. The COVID analogy that you came up with is very similar there, right? So schools have until very recently shifted to remote learning. That has allowed dependents, families to move back home, to move abroad potentially. So everything's sort of frozen and no one quite knows what's coming next.
And what about, do you also know what's going on with the well, we don't call them expats, but we often call them immigrants that are the backbone of many of these economies, like the South Asian immigrants that are doing construction work, services, etc. Have they been shielded somewhat because they're working in some of the sectors that are less affected, and are they getting government payouts if they get unemployed, or are they really in the dark, and have some of them been leaving, or are they sticking around?
So they're actually much more economically exposed because there's no kind of active labor market policy or protection mechanism for them. And to the extent that they work in construction, and construction has really very much shrunk during the last 6 weeks, a lot of them either have to go back home, or sometimes they go into the informal economy. A lot of them have taken out debt to be able to afford the informal labor fees that they have to pay to get into those countries, and then they can't go back because they can't pay back this very significant debt, and then they try to find informal work. So it's the population that's feeling it the most, also actually in terms of physical security, because a lot of those people work out in the open on construction sites and industrial sites, and a disproportionate share of the fatalities on the Gulf side have actually been expat workers, because most of the nationals have been able to stay home or stay in safer places.
Yeah. And okay, so you mentioned like the sectors. I'm also wondering, especially Qatar and Saudi Arabia and the UAE, especially the UAE, have been quite good at diversifying, but then they've diversified into sectors that are insanely exposed to this conflict as well. Mainly tourism, real estate, which is very much tied to tourism and expats living in Dubai, I think. And then also there's, of course, the massive aviation sector. Is that still on an almost complete standstill? I know you can fly in and out of the country often as if you live there, but like otherwise, is it still on a standstill? And are they suffering a lot, or do they have a lot of buffers?
Well, on aviation, some of the flights have come back. So I think Dubai is operating at something like half of its capacity. Qatar has recently reopened its airport for international airlines, where I think previously it was prioritizing Qatar Airways flights, but it's definitely much, much below the commercial sustainable capacity, and they're making huge losses in the sector. I think there's a difference between Qatar and the UAE, Dubai in particular, in that Qatar is kind of aspiring to be a globalized hub for tourism, culture, business services, and it hasn't quite gotten there yet, with a partial exception of culture. So a lot of the activities in Qatar are still state-driven, driven by state spending, by large state-owned enterprises. And although that's not very good in terms of long-term diversification, in a crisis situation, it creates a relative insulation for the economy, because at the end of the day, you don't depend that much on private demand, on private investors. Dubai has really gone by far the furthest in the region, also within the UAE, in building an economy that's almost purely based on private demand and primarily expatriate or foreign investor demand. And that kind of successful globalization, of course, exposes it now much, much more than any other economy. Abu Dhabi is somewhere halfway in between. It's a bit closer to Qatar in that a lot of what's going on there is state-driven, based on extremely, extremely large fiscal resources of the state. But in the last few years, it's been more successful in diversifying, in particular its financial sector, and to some extent the tourism sector with foreign capital and foreign residents. And those are in question now.
Yeah, so I could imagine that, because when I did my analysis, for example, I looked at the UAE, which is a combination of Abu Dhabi, Dubai, and a couple of other Emirates, that to a certain extent maybe hides sort of the vulnerability of Dubai in particular. Do you know already about sort of, is Dubai still in a vacation lockdown state, or are they already really feeling it in particular?
I mean, they have reasonable fiscal buffers themselves. They've been relatively prudent, relatively austere since the large, big fiscal crisis tied to the global financial crisis and a local real estate meltdown that happened in the late 2000s. So they can still hold out. I think what's going to happen, like in pretty much every big crisis in the UAE, is that the political weight, the political balance between Abu Dhabi and Dubai is going to shift further in favor of Abu Dhabi. That's what happened during the last crisis when Abu Dhabi took over certain assets in Dubai, when it pumped either 10 or $20 billion of bailout money into Dubai, but with quite stringent political conditions. And now that Dubai in particular doesn't have any non-Hormuz coastline, whereas there are other emirates that have land on the other side of the Strait of Hormuz, and Abu Dhabi ports also managing some of the ports assets there. I think Abu Dhabi will have a relative strategic advantage because DP World, Jebel Ali, the big ports logistics infrastructure, that's all inside of the strait, and everyone will want to diversify away from logistics nodes that are completely on the wrong side of the strait.
So that maybe leads us into a little bit of a small diversion, but how does the Emirates political system work? Is it like a confederation of sorts? Not officially, I know it's a country, but does it work a little bit like that they come together to make the decisions and then it really matters the standing of each of these emirates?
Yeah, so it's a federal country, and the eventual shape of the federation and which emirate was part of it and which one wasn't was only decided in the course of the 1970s when the country had already become formally independent. And there's some formal inequality between the emirates in terms of their voting rights based on historical population, economic power. There's much, much stronger de facto political inequality in the sense that Abu Dhabi is really calling the shots because it has by far the largest fiscal resources. It pays for the largest share of the federal budget, and as a result, the northern emirates, so the poorer, less well-known emirates, Fujairah, Al Quwain, Ras Al Khaimah, and so on and so forth, they really depend on Abu Dhabi fiscally. And there's always been an ambition on the part of Abu Dhabi to centralize control and of Dubai to retain as much autonomy as possible. And over time, Dubai has gradually lost out in that kind of contest.
And they're probably going to lose out even more because of this then?
I think so. I mean, Abu Dhabi has an interest in Dubai to some extent doing its own thing and operating as the kind of globalized hub that it is, because there's a lot of Abu Dhabi money also invested in Dubai, and a lot of Dubai assets are geostrategically very useful. Say Emirates Airlines, DP World, the large ports operator. But I think there'll be even more sort of influence behind the scene on the part of Abu Dhabi.
One thing I'm also wondering that you may know, so there's the Gulf Cooperation Council, right? And then I think, if I remember correctly, Qatar was always a little bit of the black sheep because they were cozying up to Iran. Has that dynamic now changed? Are they now much more unified because of this outside threat to all of them? Or has it actually become more intense?
So initially, observers thought that this is going to bring them together. They really have to integrate their air defenses, which is a long-standing issue that they hadn't quite resolved and that now has become very acute. They have to cooperate generally more on military integration. And there hasn't been a whole lot of this. So there hasn't even been a GCC summit. There have been some ministerial meetings. Most of the high-level diplomacy has been between GCC countries and other Middle Eastern countries on a regional basis. And there was a previous rift that had become quite visible between actually not Qatar and the rest, but the Emirates on one side and Saudi Arabia on the other side, with Saudi Arabia actually moving much closer to Qatar, the two kind of making up, and the UAE being a little bit isolated within the GCC, and also, to be fair, not being that interested in the GCC because it thinks of itself as a global player. It's not that intrinsically interested in the region. The signs so far are that this has, if anything, deepened. That Saudi Arabia has been deepening its alliances, its cooperation with other players in the region that have a very difficult relationship with the UAE, including, for example, Sudan, including Pakistan, including Turkey, and including Qatar itself, whereas the UAE have kind of gone all in terms of US cooperation and also staying close to Israel. So there's been a reshaping of regional alliances that has actually worked in favor of Qatar. So it's not isolated anymore, but it's part of sort of the Saudi, more kind of Muslim world camp, which is something that's only emerged the last 2 or 3 years or so.
Yeah, I guess I was still living 10 years ago when there was the blockade of Qatar. That didn't work, I think. And I knew about the UAE and Saudi split, especially sort of their foreign policy in Africa, right? In Sudan, they were on opposing sides, if I remember correctly. And you're saying that this has actually deepened. So does it mean that the UAE, okay, you said they're really hopping more on board on the Israel-US train, but there's also been reports that Saudi Arabia has privately urged Trump to finish the job. How does that fit into this story?
I think there was for a while a shared perception of the Saudis and the Emiratis, but expressed in parallel, and I don't think with much coordination, that the war is bad, but given that it's happening, we have to diminish Iranian capacities as much as possible, which makes strategic sense. Once you've poked the bear, and once it's become clear that the GCC is really the main target for Iran, it's the main leverage point, Iran is weakened. It can't really do a lot of damage to Israel in terms of long-range missiles, but it can do a lot of damage to the GCC, which has relatively weaker defense systems, is much closer, can be attacked with a lot more kind of low-tech munitions. And in a way that the global economy also really feels through the blockade of Hormuz. Now, once you're in that situation, that kind of neither in nor out, then it's better if Iran, gets kind of clobbered as much as possible. I don't think that was sort of a jointly coordinated position of Saudi and the UAE. I think that they came to that conclusion independent of each other. And that was at the time when there was no ceasefire. I think at this point, certainly the Saudi perception is that they want to keep the ceasefire because any kind of discrete, visible escalation now would then potentially lead to retaliation against GCC assets that are still very vulnerable in utilities, energy, infrastructure.
But then is the UAE against the ceasefire, or are you not necessarily sure?
I would guess that they're sort of in a similar place to Saudi. They've always been a bit more aggressive, but because they're so exposed, and because they bore the brunt of the attacks, I think the estimate is something like 2,800 or 3,000 different types of munitions hit the UAE, much, much larger numbers than any other GCC country. I think they want Iran to be squeezed in a way that doesn't directly expose them. So I think a breakdown of the ceasefire, given the threats that have been made by Trump regarding very problematic attacks on civilian infrastructure, would lead to attacks on civilian infrastructure in the GCC, and they can't want that.
Yeah, because when I did my analysis, sort of my conclusion was that the biggest weakness, because economically they have such large buffers when it comes to their wealth funds and fiscal buffers, central bank reserves, the biggest weakness to me seemed their reliance on water desalination plants and how easily they could be hit. Is that their biggest fear?
I think it's one of the big fears. I mean, they have planned for this kind of situation to some extent. So there is some redundancy in the desalination system, a strategic water storage. So it's not like it would have been potentially in the 1980s that you hit one plant and the country goes dry within a few days. So it would take quite a coordinated attack. The question is if Iran still has that kind of targeting and just volume-wise capability of hitting that infrastructure. But it's certainly one concern. I mean, there are other important concerns in terms of energy infrastructure, in terms of crude processing in particular. There could be other hits that could be quite dramatic and long-lasting.
And what do you think the long-term impact of this conflict will be? Let's say that it does resolve, but Iran is not taken out. What do you think the long-term impact of this conflict will be on the major Gulf economies?
So a lot depends on how it is settled. I think the settlement of the conflict is more important actually than its duration in the long run. And if we go with what I think is sort of the default expectation of the market, namely some kind of JCPOA type deal, i.e. similar to the nuclear deal that was struck under Obama, where the larger strategic concerns in the region, namely Iran's missile stockpile and its cooperation with various proxies that can threaten the GCC states and Israel, say Hezbollah or the Houthis in Yemen, with those things not being attached, so only a narrow deal, where also a lot of the fine print about what to do with the uranium and the enrichment is potentially unclear. I think we'd be in a situation where there's a risk of repeat escalation because the fundamental cause of the conflict are not resolved. Iran has also figured out, which it didn't quite know before, that it has a huge strategic lever with the Hormuz. I mean, the Hormuz closure worked like Swiss clockwork. I don't think the Iranians themselves expected it to be that effective. So I think there will be sort of a continued geopolitical cloud hanging over the region, not necessarily creating hot conflict, but a concern that Israel could move in at any time to, as they call it, cut the grass, try to destroy industrial capabilities, missile launchers, nuclear-related facilities, and that then leading to an unintended escalation where, again, the GCC would be the first target. So that's kind of almost a worst case scenario that, Iran survives. There's some thin, not very credible or not very sustainable deal. And then the GCC will always be the first victim. So that would then really, I think, put a damper on appetite for FDI going into the region. That would make many white collar, wealthy expatriates and investors think twice about deploying in the region.
So do you think then that they may revert to a certain extent? Let's say that happens, that they may revert to a certain extent to then like going back to oil in the sense that, because the FDI doesn't matter maybe that much for Kuwait or something, but it does matter massively for Dubai. Could it then be that we are going to see a shift away from everyone wanting to be like Dubai and saying, well, actually, maybe it's not so bad to be like Abu Dhabi?
Yeah, I think they will still want to diversify, right? That ambition is very, very deep-seated. It's not just sort of a strategic, economic, political target. Is also a matter of national pride and identity, that they don't want to be seen as kind of provincial oil sheikhs the way they might have been perceived in some parts of the world in the 1970s, 1980s. I think what they'll want to do is to kind of future-proof and war-proof their economies a bit more and engage in a relative shift towards activities that are perhaps a bit less reliant on fickle short-term investment, that are a bit more robust to political instability. And that could be some investment in certain heavy industries, that are becoming more strategic in the context of fragmentation of global supply chains, renewables related manufacturing, minerals processing, types of activities that don't kind of fold the moment the first drones fly. I think they'll still also continue with tourism and finance and entertainment, but it'll just be harder going. It'll become more difficult. But that's really, in their view, I think, no alternative to diversification. So they'll try to do it in a more robust way without giving up on the objective as such.
These industries may actually be also completely reliant on the Strait of Hormuz, right? Because when I was looking into Bahrain, I was surprised at how diversified they were in the sense that their share of industrial exports was quite high, actually. But all of it has to go through the Strait again. So it doesn't matter in this specific case. So could you expect countries like Saudi Arabia and maybe to a lesser extent the UAE to then try to do that still, but shift away a little bit from the Persian Gulf and rather go to other?
I think it depends a lot on the good you're talking about and how easily it can be transported. So I think we will definitely see development of alternative pipeline structures. So Saudi Arabia already has the East-West pipeline and is able to export something like 2/3 of what it did before the war through that pipeline through Yanbu on the Red Sea. I think they'll, as a matter of priority, invest in deepening that pipeline. I think in the first instance, building additional pumping stations to increase the throughput. Other countries will think about alliances with Saudi Arabia for additional pipeline infrastructure that'll potentially make Saudi Arabia more strategically central even in the GCC because it has that strategic sea line in the west. The UAE, they also have a pipeline that circumvents Hormuz because they got a non-Hormuz coastline. I think that'll be expanded to potentially cover all of Abu Dhabi's oil exports. And the Kuwaitis will have to think about using pipelines through Iraq or pipelines through Jordan and Saudi Arabia. I think, in a sense, we've reached peak Hormuz. There will be an infrastructural reaction. They have the capex. They are aware of how critical the sector and the infrastructure is. They'd already prepared for it to some extent, right? I think it shows quite some foresight that the Saudis built this pipeline in the 80s. That was used for a bit of domestic refining, but nothing else. Spent billions of dollars on an infrastructure. It was primarily sort of a redundancy measure in case of a conflict. There are other goods, all the non-oil trade in Jebel Ali in Dubai, where you got a more sort of existential issue. I think more of that trade will, or at least some of that trade will shift to other ports outside of Hormuz. But when it comes to the critical hydrocarbons, I think there'll be investment in infrastructure that reduce the reliance on Hormuz.
Yeah, makes sense. And then for my final question, do you think then that given that they will likely invest a lot in this type of infrastructure to go around the Strait of Hormuz, that this will come at the cost of some of the mega projects that we've seen?
Yeah, I think the big question marks over the giga projects in Saudi Arabia in the context of the Public Investment Fund and Vision And they were already in question before the war. And I think the conflict is largely orthogonal, is largely independent of that kind of process of revising those big plans. Might have accelerated it a little bit, but the PIF was reaching very hard fiscal constraints already before. And building a pipeline is, a couple of $1 billion, but a couple of $1 billion in a country that has sovereign wealth fund that in the case of Saudi Arabia, it's 900 billion. In the case of Abu Dhabi, it's more than 1.5 trillion. It doesn't make such a big difference. And Saudi actually probably is coming out of the conflict right now with a net positive fiscal result because it exports less, but at much higher prices.
Yeah. That's one of my takeaways was as well. Like, okay, if they can still export 2/3, but the price is double, then they earn more than if crazy. Okay. Thank you so much for this overview. Professor Hertog, that was super useful. Thank you so much.
Thanks for having me.